In our previous class, guys, we completed this question asked in ISC board in 2025. Yeah, we completed this. Now, here is one more question, guys. You please note down this, guys, starting from here. Example 13. This question was asked by CBSE in the year 2019.
Yes, sir.
Note down this, make the balance sheet. Okay. So, guys, here we have to prepare accumulated depreciation account and its, sorry, uh, machinery account and its accumulated depreciation account. Opening balance of the machinery account is 25 lakhs and closing balance is 33 lakhs. So I have written opening and closing balances in machinery account. Now opening and closing balance of accumulated depreciation account, and that is 5 lakhs and 6 lakhs respectively. So here 5 lakhs, here 6 lakhs. Now what they have given us about this about machinery account is that machinery costing rupees 8 lakhs, on which accumulated depreciation was 3 lakh 20,000, was sold for rupees 6 lakh 40,000, right? So cost of the machinery was 8 lakhs, less accumulated depreciation thereon is 3 lakh 20,000. It means written down value of machinery is 4 lakh 80,000, that was sold for rupees 6 lakh 40,000. So machinery having WDV of 4 lakh 80,000 was sold for 6 lakh 40,000. It means there is a profit on sale of rupees 1 lakh 60,000. That is 640 minus 480. Clear, guys, or not? I'm asking, is
Yes.
it clear to you all? Raman, Nakshita, Abir.
Yes, sir.
So this information we will put in machinery account and accumulated depreciation account. First, we will remove accumulated depreciation of the machinery from accumulated depreciation account by debiting accumulated depreciation account and creating machinery account with total depreciation charged on this machinery till the date of sale since when it was purchased. Then we will write its sale value on the credit side of machinery account, that is 6,40,000, and the profit on it on sale would be debited to machinery account, and that is 1,60,000. That is this one. Had there been loss, the loss we would have written on the credit side of machinery account by writing here by profit and loss account. So now we have put all these values in the two accounts. If you see, this 8 lakh also has got recorded in machinery account on the date of its sale. How? The total of accumulated depreciation and sale value is 9,60,000, which has been credited to machinery account, and profit on sale 160 has been debited to machinery account. So 960 on the credit side, 160 on the debit side. It means machinery account has been created with net amount of 8 lakh, which is acquisition cost of machinery. So now we will first balance accumulated depreciation account, of which debit side is more than the credit side. So we'll write debit side total on the debit side as well as on the credit side. And this is how we have got balancing figure of 4,20,000 here. You know that accumulated depreciation account is created only for depreciation of the concerned accounting year. It means this 4,20,000 is depreciation on machinery for the year 2017-18. So this is balancing figure which we have got. This information of 4,20,000 we will use for cash flow from operating activities by adding it to profit before tax. Now we will balance this account where credit side is more than the debit side. So first we will take total of credit side, which is 39 and 42 lakh 60,000. The same amount we will write on the debit side. And with this we have got balancing figure of 2660, that is 16 lakhs. It means during the year 17-18 we have purchased a new machinery of 16 lakhs, and this information would be part of investing activities and would be shown there as outflow of cash. Why? Because this much of money we have paid to buy this machinery, to purchase this machinery. This information will also go under investing activities as inflow of cash, because here we have received cash of 6,40,000 by selling an old machinery. Information of profit on sale 160 would be subtracted from profit before tax under cash flow from operating activities, because this profit is non-cash as well as non-operating profit. Right, guys?
Yes.
Okay. So in balance sheet, we have been given share capital, which has increased by 9 lakhs. So it will go under financing activity. Reserve and surplus, for which we have been given note number 1. And in reserve and surplus, we have only one item, that is balance and statement of P&L, 5 lakhs and 4 lakhs respectively. This information we will use to determine profit before tax. Debentures are increasing by 3 lakhs. So this again will go under financing activities. And these debentures were issued on 1st April 2017, that is at the beginning of the accounting year 17-18. It means on this debentures of 8 lakhs for the entire year, there is interest payable during the accounting year 17-18 at the rate of 8%. So 8% of 8 lakhs is 64,000. That would be subtracted, sorry, that would be added to profit before tax under cash flow from operating activities. Why? Because this interest has decreased our profits, but since interest is a financing activity, we will add it back to profit before tax. Now, here we do not have any other current liabilities in which we have unpaid interest. It means the entire interest of 64,000 on debentures has also been paid. So that also will go under financing activity as an outflow of cash. Right, guys? This information we will use to determine the amount of tax provided during the year and the amount of tax paid during the year. You will soon understand this. So here I am making one more account as part of working notes, that is provision for tax, to make you understand how does it work. So in provision for tax account, the opening balance is 56,000, the closing balance is 76,000. And we do not have any other information about tax at all. So opening is 56, closing is 76. So here we will take 56,000 and here we will take 76,000. So I have taken opening and closing balance of provision for tax account 56 and 76,000. Now in absence of any information, what is considered is that the tax liability which is coming from the previous year was paid during the year. It means this 56,000 tax which is coming from the previous year has been paid during the accounting year 2017-18, and that is why it will come on the debit side of provision for tax. The journal entry for it is provision for tax account debit to bank account. And the closing balance of provision for tax is the actual amount of tax that was charged during the year 17-18. It means 76 is the amount of tax which was liability of tax for the year. Means on the profits of 17-18, the tax applicable was 76,000. So here you do not need to write balancing figure anywhere. The total here would be 76 plus 56 means 1,32,000. And the same here also. So whenever guys you are given only opening and closing balances of provision for tax account and no other information about tax at all, then you have to assume that previous year's tax was paid during the year and the closing balance of provision for tax is actually the tax that has been charged on the current year's profit. Am I clear?
Yes.
Others, have you understood this? Taman, Abir, Akshata?
Yes, sir.
Good. Since we do not have any item of reserve and surplus, nor we have any information about dividend, we can determine the amount of profit before tax on the face of cash flow statement itself. So I'm preparing here format of cash flow statement by copying it from this example. Cash flow statement for the year ended 31st March 2018. Profit before tax and extraordinary items would be balance in statement of P&L at the end of the current year minus balance in statement of P&L at the end of the previous year plus tax provided during the year. So 4 lakhs minus 5 lakhs plus 76,000. This is the amount of profit before tax, and this is coming in negative 24,000. So during the year, there had been loss before tax. Not actually profit before tax, but we show here profit before tax only, and the amount of loss we present here with brackets, with parenthesis. It means it's a negative amount. Is it clear to you guys or not? This calculation part.
Yes.
Abhi, Rakshita, should I ask you
Yes,
individually,
sir.
guys? Kaman,
Yes, sir.
to this we will add depreciation on
Oh,
machinery. Depreciation charge on machinery is 4,20,000. So that we will add here. Then interest on debentures. Its working note we can present on the face of cash flow itself, which is 64,000. Because by the end of the year we had balance of debentures of rupees 8 lakhs, and these debentures, the new debentures of 3 lakhs were issued at the beginning of the accounting year, that is on 1st April 2017. It means on the entire debentures, interest for the entire year is payable at the rate of 8%. So 8% of 8 lakhs is 64,000 that we will add here. And that is what I have done here, right? Apart from this, yes, we have one more item, that is profit on sale of machinery of 1,60,000. Since it has increased the profits, we will subtract it from profit before tax. So less profit on sale of machinery, 1,60,000. Okay. Apart from this, so guys, have you understood this part till here?
yes,
Yes.
sir. Yes, sir.
Okay. Now, guys, we do not have any other item to be adjusted to profit before tax. Yes, we do not have. So we will first find cash flow from operating activities before changes in working capital, and that would be sum total of these four amounts. So this is 50, 470, 470 minus 160 means 3,10,000. Two 260, 260. Yes. No, it is 3 lakhs. I'm sorry. Yes. So cash flow from operating activities before changes in working capital is positive 3 lakhs. Now we will see the changes in the items of working capital, that is current assets and current liabilities. In current liabilities, we have trade payables, which is increasing by 1 lakh, which is increasing by 50,000. And you know that whenever there is an increase in current liabilities, we add it. So we will write here add increase in current liabilities and here trade creditors. Sorry, trade payables by 50,000. Now, you know that provision for tax, which is part of short-term provisions as given to us here, that is not considered as part of current liability as far as working capital changes are to be determined. Right? So we will move towards current assets. Here we have only one item, that is inventories, because you know that current investments and cash equivalents are considered as part of cash and cash equivalents for the purpose of cash flow statement. So inventories here are also increasing by 4 lakhs. Increase in current assets is subtracted, so that we will do here, less increase in current assets, and here we will write inventories by 4 lakhs. So sum total of these two items of working capital is 3,50,000 negative. So now with this, we have 3 lakhs here and in positive and 350 here in negative. So cash flow from operating activities after changes in working capital is 50,000 negative. That is 3 positive and 3,50,000 negative. So net of this is 50,000 negative. From this we will subtract tax paid during the year. The amount of tax paid is 56,000. So that we will subtract here. So with this, net cash used in operating activities is 1,06,000 negative. The same we will write in our outer column. 1,06,000. Have you understood this, guys, or not so far?
Yes.
Yes.
Okay.
Sir, I had a confusion.
Yeah.
Sir, if the amount is coming negative, then it's necessary the companies to pay tax.
Yes. See, tax not only includes current year's tax, but also includes some part of deferred tax. So that is altogether a different subject for you people. That is income tax, where it's a big law. So you should not get into that. Accounting, from accounting point of view, we have got that tax has been paid here, and that we have to treat accordingly with our knowledge of preparation of cash flow statement. Any other doubt, Habir?
No, sir.
Okay. Now here we have purchase of machinery. We also have sale of machinery. The amount of purchase of machinery is 16 lakhs, which we have determined here. and the value of sale of machinery is 6,40,000. So we'll have 16 lakhs here in negative and 6,40,000 positive. Apart from this, in balance sheet, if you see, we have intangible assets increasing by rupees 1 lakh. Now, its details are not given to us. Its notes to accounts is not with us. So in that case, we will assume that we have purchased the intangible assets that we had with us with rupees 1 lakh. So that also will be part of investing activities. So here we will write purchase of intangible assets. By rupees 1 lakh, this also would be outflow of cash, right? With this, now we have got net cash used in investing activities, marked as small b, and its amount is 960 10,60,000. So in the outer column also will write 10,60,000. Now cash flow from financing activities. Here we have issued fresh shares for rupees 9 lakhs. So this is inflow of cash by 9 lakhs. And in long-term borrowings, debentures have also been issued by rupees 3 lakhs, right? So proceeds from issue of shares is 30 lakhs minus 21 lakhs. The closing balance is 30 lakhs, opening was 21 lakhs. So net proceeds is 9 lakhs. It's inflow of cash. And proceeds from issue of debentures is 8 lakhs minus 5 lakhs, that is closing minus opening balance of debentures, which is rupees 3 lakhs. And payment of interest on debentures is 64,000. The total amount of interest payable during the year, that is this one. So this amount has also been paid. Why? Because in balance sheet we do not have any outstanding or unpaid interest reflecting in liabilities side. It means the entire interest has been paid, so that will come under financing activities as well, which would be outflow of cash. So with this, now we have got net cash flow from financing activities, marked as small c, and that is 12 minus 64 means 11 lakh 36,000. The same we will write in the outer column, 11 lakh 36,000. So with these three amounts, now we get the net cash flow, and that is the total of these two negatives is 11 lakh 66,000 minus 11 lakh 36,000 means there is outflow of 30,000. So net cash used in A plus B plus C, that is operating plus investing plus financing, is 30,000. To this we will add opening balance of cash and cash equivalents, and that is 78,000 current investments plus cash and cash equivalents of 78. So this gives us amount of 1,56,000. We'll write here 1,56,000 as opening balance of cash and cash equivalents. It means the closing balance of cash and cash equivalents should be 1,26,000. That is sum total of these two amounts. Here you can write how you got opening balance of cash and cash equivalents. That is 78 plus 78 means 1,56,000. And here also you can write the closing balance of cash and cash equivalents, and that is 89 plus 37 means 110 and 16, 126. And this is equal to 126. It means the amount of net cash flow which we have calculated and presented here is absolutely correct. Is it clear to you all, guys?
Yes, sir.
Yes.
Yes, sir.
So, guys, start noting it down from here.
Yes.
Yes, sir.
I hope, guys, you are done with this part also, right?
No, sir.
Yes.
What is left, Abir?
Yes, sir.
Sir, on the operating.
Which part? Here are you?
On yes, sir.
Okay. Fully right.
Yes.
Everyone,
On
Yes, sir.
Abir, how much is left?
on the last lines.
Okay. So I hope, guys, you all have understood how do we prepare cash flow. We have seen many examples, many questions. As I told you, this question was asked by CBSE in the year 2019. Right or not?
Yes, sir.
Yes, sir. Then, sir.
So, guys, in cash flow statement, I will, in the next class, I will explain you this title accrued interest on investments. And I will do two more questions which have been made by me only, full-fledged questions of cash flow in which you have many adjustments. Though CBSE asks maximum two adjustments in cash flow statements means in the questions of cash flow you would be given maximum two additional information. But the questions that I would be doing from our tomorrow's class will have many adjustments so that in two questions itself we could cover most of the things. Right, and after that, guys, we will again start with partnership part. Right, so I'm ending today's class here itself.